Hello traders, you're welcome to today's video and you're welcome to my channel. For those of you who are already subscribers, okay, this video is a kind of continuation from where we stopped. But for those of you who are watching my video for the very first time, guys, the best thing you can do for yourself right now is to subscribe to this video and go to my channel and watch the previous videos on how we've been talking about divergence. Okay, so do me a favor by subscribing to this particular video, after which you then go down to the description on this video, below this video, and you will get the link to where my playlist is. I've compiled all the videos so far into a particular forming a playlist for any of you who wants to view. Okay, watch them from the very beginning so I understand everything I have taught you so far. Now today we're going to be talking on how to perfectly join a trend using divergence. All right, you can see that you can see the most reason why you should subscribe to this particular video, because we've not talked on any yet. The ones colored red are the only ones we've talked on, but the ones colored black are the ones we've not discussed on. So you can see that we have so many things to talk about, and the only way I can get these videos is by you subscribing to this particular video, so I can get the remaining topics on how to trade divergence. Okay, so let's get into the business of the day: how to trade or how to join a trend using divergence. In today's video, we're going to focus mainly on the uptrend. But if today's your very first time you're hearing about the word divergence, okay, and you're wondering what divergence is all about, divergence is simply a conflict that occurs between the price and the oscillator. Okay, what do I mean by conflict? A difference that occurs between the price and the oscillator. For example, now we had something like this. Guys. Price giving us higher highs, oscillator giving us lower highs. Okay, now see what happened here. Oscillator gave us lower lows, price giving us higher lows. All right, so once you witness something like this on the chart, then understand that it is divergence. But I'm not going to talk on how on divergence right now, because I've talked on it before. Just go to my channel and watch the video titled how to trade divergence. All right, so today we're going to talk on how to join a trend using divergence. Okay, using divergence. And some of you may be asking, why is there no resistance line above here? Why is there no resistance line above here? We are not talking on how to trade channels now. Having this above here, you're simply talking of, you are simply telling me we should talk about channels, and I've talked on channels in my previous video. All right, today we're just talking about how to join a trend, not how to join a channel. The difference between channel and trend. Now the trend, that's why we're focusing on. We're just focusing on the uptrend alone. In today's video, we're going to focus on the uptrend alone. Now, before considering joining a trend, guys, what should you consider? Market should establish at least 2 swing lows or 2 swing highs. And for a downtrend, as for an uptrend in today's video, we just focus on market establishing 2 swing lows alone. Market should we only focus on market establishing 2 swing lows alone. Okay, as the case may be here, we had a divergence here. Guys. But remember, we did not take it because we only want to do join. We are looking for a way to join a trend or probably begin a trend. Okay, so the only thing we are looking out for was market should just give us 2 swing lows alone. Now in this case, now market did gave us 2 swing lows as it is here. So that was where we started from, and that is where we're going to start from in this video. After the market gave us 2 swing lows here, now we waited for a price to go up and came back to do bounce on this particular level again, on this support level. And after bounce on the support level, now guys, some of you will be asking me, what will be complaining, why is my support line not connecting this candle? Some of you already have understanding of it, but most of you don't have understanding. And I'm going to tell you why I did not focus on connecting, why I did not focus on the support line passing through here. Rather, I went through the candle, because this breakout was fake. This breakout that occurred here was fake. It was meant for traders to do or take this place, these traders to sell. That's why I did not focus on that. We are only focusing on what the real bounce on the on the support line, the real bounce on the support line, like what we are having here, and here. Okay, so this type is what fake. That's why I did not concentrate on it. So now, after market establishing what two swing lows, after market establishing two swing lows, we waited for price. That was our beginning point, because we waited for price to do what, go up to any level and come back and bounce on this support line again. After bouncing on the support line again, the next thing we did was what, we went down to our oscillator looking for what, divergence. Bouncing here alone is not enough reason for us to do what, take this trade. Remember, the price first bounced forming what, a hammer. See what happened here, price first bounce forming what, a hammer. So if all you do is to just trade like this without an oscillator or without confirming, going for more confirmation, see what happened, you were stopped out of this trade, because probably you would have taken this trade at the close of this bullish hammer, all right, and your stop loss would have been just below this support level, and you would have been stopped. Okay, so each time you witness a bounce on a level like this, guys, when go back inside of the oscillator and compare likes for likes. They are doing the same thing. I kept repeating this word in all my videos. Anytime we get a sudden breakout in the market, in the price, go down to your oscillator. Is that breakout real or fake? For a real breakout, there will be no divergence. For a fake breakout, there is divergence present. So, but guys, this particular breakout here was what, fake. Why is it fake? Because oscillator did not record what, the same thing. It recorded what, lower lows, while price was recording what, higher lows. So this guy, that's why this breakout is what, fake. Fake breakouts, real breakout don't have divergence. Okay, oscillator must do the same thing if it's actually a real breakout. But for the fake ones, oscillator must do what, something different. At the event trader, we are only expected to follow what the oscillator is telling us. Why? Because oscillator is what the market makers cannot manipulate. The forex market is manipulated, so the only way we can tackle these guys and make money out of this market that is highly manipulated is by having a trading system that can detect the fakeness in the market. The only way they can take our money is by faking us to take some decisions, to take some entries, early entries and late entries, so at the end of the day we are stopped, because they cannot come and click the mouse button for you. It's by giving you some certain moves, certain fake moves, so that you can end up entering the market early or too late. Then at the end of the day you're stopped out. So if you enter this market because you saw a hammer on this support line, guys, you were stopped. Okay, you were stopped. If you enter this market because you saw this hammer on this support line, you were stopped, because the market still went down for stop hunting and that did what, went back up. So the moment you witness a bounce like this, what should come into your mind? Go down to your oscillator and compare, are they doing the same thing? Now even when price bounced here with a hammer, even when price bounced here with a hammer, guys, forming a hammer, what was oscillator doing? Oscillator was still here at the oversold, while price was still giving us what, higher lows. Oscillator have already given us what, lower lows, that's gone down below this previous low. So already you should know that this hammer they are bouncing here with is fake. Okay, have you seen? See what price gave us? Price had already given us lower lows from what oscillator was giving us in what, as what, higher lows. See now, let's say the price was here just below this hammer. Okay, even then there was still manipulation showed. So for those of you who took this trade at early entry because you did not witness what happened in the oscillator, you were stopped. But for those of us who waited for divergence, even when price was here, we waited for the right time to do what, buy. By price at the right time, I'm going to show you as we proceed when to buy this market, because the fact that the price is here doing different things from what oscillator is here doing different things from what the price is telling us doesn't mean we should just buy. We waited for the right time to do what, take this trade as a buy trade. So now oscillator buried itself here, while those guys are still what, manipulating the market. But at the end of the day, what happened? They formed another low, but still what, higher than the previous low, and oscillator still recording what, lower lows, something different from what the market is doing. At that point, guys, we now waited for what, the perfect time to take this entry. All right, now remember, we now have two confirmations. One is that price has bounced on the level. but it's not reason enough for any trader to do what risks our money in the market. Now, as oscillator has given us what lower lows compared to what price is giving us. Now the second one is what divergence. First we said price has gone to the support level. Second is what price has given us what divergence. Now the next thing we have to do now is to wait for the perfect time to do what take our entry. Now we are waiting for the perfect time to take this entry. What I said in my previous video was in how to trade divergence is that you wait for price on the oscillator to come back and break this previous level. This oscillator that's buried itself here must rise, breaking this previous level before we do what consider buying this trade. Now let's trace where the oscillator, the candle that made the oscillator to break that particular level. It was this bullish candle. Okay, it was this bullish candle. Now we now have what 4 confirmations. One is that price is at the support level. Secondly, we have divergence. Thirdly, oscillator have done what broken this previous level, and lastly, price is giving us leaving this zone with a engulfing candle. It's coming back to break and close above the support line with an engulfing candle. So guys, that my friend was our entry at this level. At this level, after price closed above that level with that powerful engulfing candle, that was what our entry as a buy trade. Now have you seen that when we waited for the right time to take this trade, we were on profit consistently. But if you took this trade very early, just as they manipulated you and you fell into their trap, and you took this trade very early because you saw what a powerful hammer on this support level, you would have lost this trade. And the next time you would have seen something like this, the real chance to enter this market, opportunity to enter this market, maybe fear would have entered your body. You would have been scared of entering it again. And by that time, if you allow fear to overrule you at that moment, you would have lost or missed the real move. So avoid too much early entry so that you will not easily be afraid of taking the real trade. Alright, now see the next move. After we took this trade as a buy trade and we made money out of it. Now remember, we are focusing on what buy trade, not the one that goes down. We're only focusing on what buy trade. So once you buy, you set a take profit and stop loss, that's fine. Once that hits, it is it. Remember, it's an uptrend, and they always told us the trend is our friend. It's only our friend if you are in the right direction. Like what occurred here, the trend is not your friend if you enter this market very early here because you are stopped. But the trend was your friend if you took it from here, because you see you enjoyed the money all the way up, and you're still enjoying the money even though this trade was still on, this first entry was still on. Okay, that's the only way, that's the only time the trend is your friend if you're at the right direction. So guys, after we took this one, the price went up and did what? Came down, and we waited patiently for it to come down and bounce on this level. Don't take trade in between once price have left this level. Like what some people would do after price have done something like this. You want to come and take trade up here, or you want to come and take trade all the way up here. No, the price has already gone. If you wait for this retest, fine, but most of the time there's no retest for you. So after this breakout, just wait for the perfect time to enter from the oscillator, due to the direction of the oscillator. Okay, and once this breakout occurs, see when you took your trade. Whatever happened there, you're already on the trade, and if the price comes back, fine. If it doesn't come back, you're already on the trade. If you come back to retest, it will retest and go back in your direction. If it doesn't come back to retest, you're already on the trade. So stop chasing trade. If you miss this move, you miss this candle, guys, don't. If you miss the first breakout, the second candle, and the third candle, at least, don't forget about that trade. It is gone. Don't chase it, because if you take your trade here and you're setting your stop loss below here, are you certain that the market will move times 2? Are you certain that the market will move times 2? So avoid chasing trade. Avoid chasing trade, guys. Now we took this trade as a buy and we made money out of it, because we did it the right way. Good. Now let's wait and see what market or price have for us again. After the price went all the way up, it came back. Remember, we are only focusing on what price bouncing here, giving us what divergence. So price went up, went all the way up, and what did what fell. It fell and bounced on this support level, giving us what higher lows. Now what should we do after witnessing a bounce on a level, guys? Go down to your oscillator. Is it doing the same thing? Is it doing the same thing? Is it doing the same thing, guys? The answer is what? No. Price went up and dropped here, but oscillator did what? Okay, now it went up and dropped, giving us what? Higher highs, higher lows. But what was oscillator giving us? Lower lows. So this is another perfect setup for us, guys. We took this first one as a buy and we made money out of it. Now after we left this way, market came back and bounced on this level. What should you do the moment you witness a bounce on a level or a breakout in a level? You go down to your oscillator to check, is there divergence, is there similarity, is there differences, are they doing something different? Which is the divergence we're talking about. If the price and oscillator are doing something different, like what happened there after a bounce, fine, that's what we are looking for in the market. At this point, oscillator should come back and do what? Close above this particular level that it broke. Let's trace a candle that broke that level, guys. Okay, cool, this particular candle. So now see what happened after a bounce on this level. Okay, now this time there was no breakout, so after a bounce on this level, we took our trade at this what? At the close of this candle, because this was a candle that made this oscillator to rise and close above this previous level. So we took our trade here, and what our stop loss at this what level, just below the support level. So we got that trade again. We got that trade what again, guys? The second trade we won from this uptrend. Remember, we started from here after price established two swing lows. The next swing low that it produced was what? A higher low. Was divergent oscillator was giving us what? Lower lows, and we took it as a sort of what? Divergence. Now the second one, price went up and came down, giving us the same thing as the first, and we still did what? Took it, and we still what? Made money. Now price went up again, guys. Price went up again this time, and did what? Dropped. After it dropped, it formed what? Higher lows again. Form higher lows again, guys. Form another higher lows, and we went down to oscillator. What was happening? Compare like for like, guys. So this was a level we bought here and we took profit here. Okay, now we left price reversed from here and bounced back here, giving us how what? Higher lows. But what was happening on the oscillator? Oscillator was giving us what? Lower lows again. Have you seen, guys? Oscillator was giving us what? Lower lows, divergence back to back 3 times. And now this time the same thing happened. We waited for price to come back and break and close above this previous level on the oscillator. Let's trace the candle that broke that level. Good. It was this what? Hammer. This hammer here. So after that, guys, we took our trade at the close of this what? Hammer. We took our trade at the close of this what? Hammer. So again, we made a very good trade out of that one. Have you seen? Because our stop loss was just below the swing low candle. Have you seen, guys? Divergence 3 times back to back to back, because what? We are focusing mainly on the uptrend and we want. Okay, all the signals that the oscillator produced, the divergence signals, we've taken all of them and we've made money out of what? All of them, and probably we still have more. So let's keep what? Checking. Now we've won 3 trades out of 3, joining what? The trend. This is the only way the trend is a friend, though, guys. If you're losing trading a trend, trying to join the trend, it is not a friend, because it's taking away your money. But once you're winning, guys, you are a friend to the trend. As what we are doing here, we are winning. So we are friends toward this particular trend. Right from the very first beginning, we've been a friend to this trend and we're making money because it gives us what? Money. Now let's come down and do what? The market went up and do what? Came down again. As it came down, what happened? Nothing occurred here, because market gave us lower, higher lows, but oscillator recorded almost the same thing. Okay, See what happened here? Price fell from here and dropped here. Now oscillator fell and still dropped here, giving us what? Equal lows, equal lows, equal lows, equal lows. Now price did what? Rise up again small. Remember I told you oscillators are meant to follow prices up and down, and did what? Fall again. Oscillator did what? Also rise and did what? Fell. Now they gave us higher lows, oscillator still giving us higher lows. So from this point we did not have any signal. We left, waited for price to give us more signals. Now price went up, boom, oscillator went up from here again. All right, it came down, oscillator did what? Follow the same thing. You see that this is what oscillator is meant to do. But by the time you start witnessing manipulations in the divergence in the market, that means the big banks, the people moving this market, are in control. They want to manipulate you out. Okay, so that's why you should not follow this chart you're seeing. Follow the oscillator, because this is the only thing they cannot manipulate. This one will always do its work, but this one they can just wake up any morning, early morning, and start manipulating this market, this chart for you. All right, so guys, see now the price fell and this one fell, doing what? The same thing. Now it skyrocketed, went up, and did what? Dropped. It dropped here. Now I'm going to be very raw, guys. I won't say it dropped here. I'm going to be very raw, because at the point, see where it dropped and divergence occurred here. Price gave us what? Higher low, higher highs. Price gave us higher highs. Why? Oscillator did what? Gave us what? Lower. Price gave us lower. Price gave us higher lows. Oscillator gave us what? Lower lows. Okay, and the signal was valid because price came back and broke and closed above this level, and we took our entry from this level. Yeah, from this level. But you can see that the price did not get there, rather the price went down and did what? Stopped us. Some of us, those of you who were looking for, waiting for price to get to this level before you take your profit, you were stopped out of this trade first. But those of you that took your profit from this neckline of this M, this is the M I'm talking about, guys. You see price went up, here, it dropped here a little, and it did what? Went up, and did what? Dropped again. So that is the M I'm talking about. So most of you that took this trade as a buy from this level and took your profit at this neckline, you were what? You were exempted from this disaster that occurred here. But those of us waiting for price to get here, we were what? Stopped. And if you watch my previous video, I told you about levels. Never ignore the next level, the level next to your entry. Never play down on the level next to your entry, no matter how small or weak the level seems to look like. Like what occurred here, if you didn't play down on this level and you kept your first target here, you would have been exempted from this disaster that occurred here. But if you play down on this level by keeping your take profit up here, you were stopped first, and probably you wouldn't have taken this second entry that would have completed your money. Alright, so don't always play down on a particular level, guys. Don't always play down on a particular level. So if you took this trade, the next level next to you is what? This neckline of this M. The neckline of this what? Of this M. Now let's check. Let me show you the perfect M shape. Let me highlight this zone and show the perfect M on from the 4 hours time frame. I don't want to see it. Okay, almost here. So this is the zone from the lower time frame. Remember the one we saw was what? The daily. So this is the perfect M shape. Have you seen? Have you seen the M? The M I told you about from the small time daily time frame. You step down to 4 hours time frame. See the perfect M shape. The perfect M formation. So those of us that took our profit on this neckline, just at this neckline, we were exempted. But those of us that did what? Took our profit, waited to take profit at the top of this M, we were what? Stopped. We were stopped before the market came what? Back. But fine, even though you were stopped, guys, even though you were stopped, you've made you've won how many trade? 1, 2, 3. Okay, you won 3, and the one that would have made it 4 is this one you lost. But fine, because there are two things. If you took your profit here, or for scalpers, you would have won this trade. That means you would have won all the 4 trades from this trend. I know how much money, guys. You know how much money you would have made. So you won 3. Let's say you won 3 and lost just 1 trade from this trend. So out of the 4 signals you got here to buy, you won 3 and lost just 1. So guys, I hope you understand what I taught so far, how to join a trend. Let me give you a quick recap, guys. Let me give you a quick recap. The first thing you should do is what, guys? If you want to consider joining a trend, market should at least give you 2 swing lows or 2 swing high before considering joining a trend. Now in this case, see what happened? Market gave us 2 swing lows. So we waited. We now connected our line, joining those 2 swing lows, waiting for price to do what? Come down. See what I got here? Now we now did what? Extended something like this. Our line should pass through these 2 swing lows. Alright, so expecting price to do what? Come back and bounce here again in the future. Now price went up and came back and bounced. Now the moment price bounced, what should you do, guys? I repeat, go down to your oscillator. Are they doing the same thing? Remember, we want to enter this, join this trend with divergence. So go down to your oscillator to check if they are doing something differently, which is the divergence we are talking about. In this case, they did something differently. Okay, price chart giving us our higher lows, oscillator giving us our lower lows. Okay, so we took this trade all the way up. Now we now extended this thing again to the future for price to come down and do what? Bounce on it again. For price to do what? Come back and bounce on it again. So now the price went up and came down and did what? Bounced again. Good. After a bounce, we went down to oscillator. What's happening, guys? Is it giving us the same thing or different things? In this case, it gave us what? Different things, because oscillator gave us higher lows, while oscillator price gave us what? Higher lows, oscillator gave us what? Lower lows. All right, now we now extended it again after taking our trade to the future for price, expecting price to come down and bounce again, because we are not trading with a trend. You see how good it is to trade with the trend. That's what I said, trend is your friend, but if you don't know how to do it, it is your enemy. Alright, so when I extended the line again for the price to come back and do what? Bounce on it in the future. And price went up and did what? Came down and bounced, giving us what? Higher lows again. While oscillator was giving us what? Lower lows, which is what we are looking for in the market to join this particular buy uptrend. Now, after that, see what happened? We took our trade all the way up again. We now extended our line again to the future for price to do what? Travel from this our buy and come back whenever it wants to come back to bounce here again. At this time it came back and did what? Bounce. But after it bounced, now it went down to oscillator. Is it doing the same thing? There was no divergence here, isn't it? Yes, there's no divergence. So we left this trade without taking it as a buy. Alright, we didn't take this particular uptrend upward move here because we did not get a signal. Let's be honest with ourselves, we didn't get a signal, so we didn't take this trade. So we now extended it again, connecting that one to the future. Whenever price does come back to bounce on this level again from this particular point it rose. So now the price went up and did what? Came down. After it came down, what happened, guys? It still went what? Up. We took it as a result of what? Because price did what? Gave us lower lows in this case. After going up with small profit and stopping us again, it now gave another divergence and see what occurred. Price giving us what? Higher lows. At that point we took our entry here and we went up, but this time we now extended our what? We now extended our line to the future, expecting price to just bounce and go back up. But this time what happened? The price went all the way down and broke this level. Breaking the level is not an issue. The issue now is, what is the oscillator doing? Is it doing the same thing? Now see that price was giving us what? Lower. At the point, see where the price was, so it was giving us what? Lower lows, and oscillator was still giving us what? The same lower lows. You see why I say for every fake breakout there is divergence, but for the real ones there are no what? Divergence. Now see price broke this level, and okay, after it broke this level, forming what? Lower lows. Oscillator was doing what? The same thing with us, with the chart giving us what? Lower lows. So this, my friend, was a real breakout. So if you had an open trade from any of these entries, you would have taken what? Your profit after the breakout of this candle, witnessing the oscillator doing what? The same thing. I hope you understand what I mean. So even though you were you were still on this trade because you were feeling like buying with the trading with the trend, allowing your profit to be maximized. You are still on this trade. You were out of this trade the moment what you are still on that trade, the first one. So you were out of that trade the moment what price came back and did what, broke this level and closed below what, the trend line, the support line. Okay, so see where we left this trade at this point. We took our trade all the way what, up here. So for those of us that entered this market from the very first entry, allow the market to run, we left this trade here. Why did we leave this trade? Because the market broke this level. Not only breaking this level, the oscillator recorded the same thing. So it was what, a real breakout. And see what happened. Because it was a real breakout, see what price did. Price went all the way down, guys. So for every real breakout, this is the bottom line of this discussion. For every real breakout, guys, there is no divergence. The oscillator and the price must do the same thing. But for every fake one, you will have divergence. Like for these first ones now, this first breakout now, it was fake. So why is it fake? Because we got the divergence, and you see that the market went back up after triggering so many stop loss. It went back up. Now but this time the breakout occurred. This one was a real one. Why was it real? Because oscillator did the same thing. So and because it is real, see what happened in the market. Price went all the way down and gave us what, and a downtrend. So guys, this is the best way I know that you can use to join a trend. I don't think there's any other means that is more perfect than using divergence. There's no other means more perfect than using what, a divergence. Because one, the divergence helps you to filter out fake breakouts, like what I just explained. The moment price bounced on a level, what happened? It went down to oscillator. Is it doing the same thing? Like this first breakout, and after it broke out, was the chart doing oscillator doing the same thing? No, this one was giving us what, lower higher lows. Oscillator was giving us lower lows. So it was different thing from what oscillator was doing. And as a result of that, this breakout was what, fake. And because it was fake, see what happened? The market went back up. But for the second breakout that occurred, price went all the way and broke this level. Now breaking a level is not an issue. The issue is oscillator doing the same thing? The answer is what, yes. Oscillator was doing the same thing, and that's what we call real breakout. Because oscillator recorded what, the same thing. And because it is real breakout, see what happened? Market traded all the way down. And if you fail to close a trade expecting more, you were what, stopped. At the end of the day, you were what, stopped. Market went all the way back to your what, entry point. All right, so you wasted all the time. Because remember, this is a daily time frame. You wasted all the months only for market to come back and do what, break even for you, because you took your entry here. And at the end of the day, see where the market got, and who knows if you were not stopped. So this is the best way, guys, you can use to join a trend. So once again, guys, thank you very much for watching my video. If you like this video and you learn something new, hit that subscribe button so that you get more of my teachings next week. And subscribe, comment below, tell me more areas you can use, I can talk about, that you finding it difficult to understand, that you feel I can help you out. And I promise you I'm going to do just that for you. All right, I'm going to make a video for you based on whatever you tell me to do. And also like my video, share and comment below. Subscribe, that's the most important thing, so that the next time I release another video for you, you will get it right from your bedroom. Okay, and if the whole process is still getting you very confused, do well to get my book. I wrote a book on this strategy called Simplicity of Divergence. Okay, the Simplicity of Divergence, the book is just meant for this purpose. All right, the book is meant for this purpose, and you can read it, and I believe you're just gonna change the way you trade. All right, so thank you very much. Our next topic will be on how to trade multiple time frames using divergence. Yeah, so subscribe to this particular one so that you get this topic when I release it next week. Thank you very much, and I wish you all a successful trading career.